Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me is Phil Mackintosh, Chief Economist at NASDAQ, for an update on the latest COVID-19 news, the U.S. and global economies, and how investors are reacting as we make our way back to normal. And Phil, the economy reopening, and this is something that we've spoken about for quite some time, it's different than it actually functioning normally. And it feels as if the market, with a sideways kind of trade, is coming to terms with that.
Yeah, I mean, the market since Monday last week was pretty close to sideways all the way through, and today it's not really moving much either. And I think what we're seeing is, we've had a pretty strong rally. It's pricing in already a pretty good recovery in earnings, whether it's later this year or into next year. And now we're kind of waiting for whether that's true, whether we're going to have a vaccine or whether we really are going to work out how to get back to work safely, get everybody back to work. And have the economy back to full steam sometime next year. The data that we've seen over the weekend hasn't really been that promising, though, because the COVID cases globally are hitting all-time records. A lot of that is obviously growth in the emerging zone, with a whole lot of new cases in the emerging markets, but also the US is seeing a significant uptick. And even some of the countries that we've been looking at who opened before the US, like Germany, have started to see a few more cases as well. Not nearly as dramatic an uptick as we've seen in the US, but an uptick nonetheless. And so when you're starting to see data like that, you realize COVID's not going to go away on its own. And we know from some of the previous things we've looked at that when there is an increase in case risk and when there is an increase in contagion, people behave differently. And that's kind of what you're talking about, is if people are going to behave differently, even if we tell the shops that they can be opened, will shoppers come? Will restaurateurs have customers that want to buy the food and sit next to each other indoors? And we've seen from data in Sweden that even if you don't shut things down, people's behavior changes pretty dramatically and the economy shrinks whether you like it or not.
I think part of the issue is too, and I don't know if it's an issue, but we certainly are testing more. So of course the numbers are going to rise, but there's also been some polling that suggests if a vaccine is available, not everyone is that quick to go and get the treatment.
Well, I mean, even the numbers are just astounding. If you think about 7 billion people in the world, it would take a while to actually create that many doses. So, I mean, that's a whole different geopolitical debate, isn't it? If America comes up with a vaccine first, I guess we're going to get the first 300 million vaccine doses, and then which countries get them next. And that's part of the politics of what's going on with vaccine prep right now. It's going to take way longer than people think to get 7 billion doses. Some of the best case estimates talk about hundreds of millions of doses, potentially by January next year. So you're right. Like, even if we have a vaccine, we're not going to be able to vaccinate everybody until well into the middle of next year, or maybe even later, based on what we're reading for production capacity going forward. So the vaccine solution, to your point, is a pretty long-range solution. It would need to be pretty broadly available for it to be actually effective globally.
All right, and to wrap up here, let's take a look at our last chart. The question is, where's the smart money putting its money?
Yeah, so last week, the super active ETFs, which is this top 10 list, it's basically looking at ETFs that had a combination of asset growth or shrinkage, excess volume trading, value trading, and also price return. And so the top 10 came out with lots of what I would call prolonged COVID trades. There's a lot of internet stocks, software stocks, computing and cloud stocks, which are all the sorts of companies that we're using more now that we're working from home. There's a couple of biotech and medical devices companies in there. You could even say that the Russell 1000 Growth ETF down there at number 10 is a prolonged COVID trade, because we've seen that growth outperforms when interest rates have held low. And so that would be an argument for large cap, well-capitalized companies that are going to see unusually low interest rates outperforming. It looks like a kind of forward-looking group of companies and themes in there, but I think it's very much a prolonged COVID trade that you're seeing people doing with ETFs.
All right, Phil, thanks for joining us as always.
You're welcome, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.